Hey everybody, how you doing? I hope you're having an enjoyable weekend. I wanted to get a quick video out this weekend to go through some of my favorite setups coming into next week. I've talked quite a bit about the indexes the last couple of weeks. I'm not going to hit on that too much this week, but here's the SPY, S&P 500 ETF. The key level I was watching is a 61.8% retracement from the January highs to the February lows. We closed just above that area. But it's not quite all clear yet. There's this gap down here from February 2nd. And then we kind of retested that area here. You see the wick on that candle, and again here, and again here. So that's right where we closed Friday. So if we can get a little push up, up about another dollar or so, I think we have a really good chance to retest those all-time highs in January. So just something to watch. We don't really know what's going to happen, so we'll just have to go with it. But all the setups I'm going to go through in the video are long setups. And also, if you're used to seeing my charts, I usually use candlesticks with a 50 and 200 day moving average. But oftentimes when I scan and look through a bunch of charts in a row, I'll just use plain high, low, close bars. It's easier for my eye sometimes to spot support and resistance and trend lines that way. So I'm going to go through all the charts with that look. So it's a little bit different, but this is how I often look at it when I'm doing my research. So here's the first one here, ENV. You can see this area here just under $55 was resistance here and resistance here. And then Friday had that big day. I think it was their earnings announcement. It went under that level briefly and then closed well above it. So this is a good area to trade around. Prices, only about 5% above that. So for me, if I was to go long here, a good area for a stop would be just under Friday's lows. And then also on this one, if it can get above its highs last week, that coincides with the all-time highs as well, going back to 2015 there. So a nice bullish setup there, retested it. So we'll look for some more upside here potentially. And we have that defined risk, which is critical. Next one is VRNS. I talked about this one last week, had this nice breakout, and it's just kind of been consolidating. So it may need a little bit more consolidation, but if it starts running up, I think this one could make a nice long over this highlighted level here, just over 55. So it's another one that I'll be watching. Here's another repeat, MTOR. There's this gap area here, had that big move up, and then it's just kind of been consolidating, giving back those gains. But if it looks like it starts to turn up here, I like this one on the long side above that yellow area. I don't have the volume at price indicator but up right now, but if I did, you would see a big bar here because there's been a lot of shares traded here in this, $25, $20 to $27 range. So that's really what would trigger me to go long this. If we can crack above that range there, say $27, that would be a nice area to go long. The more shares that are traded at that level, the more important it becomes. So if we can get over that, it's very bullish for this one. So this is another one on my watch list. This is one I talked about previously before. I'll look at the weekly here. Just a really nice chart. It broke above this area that was resistance a few times, kind of washed out. I was actually in this stock and sold it at a small loss before they came out with their earnings report. Then they reported earnings and it went way up, but I'm going to zoom in now to the daily. And you can see it's kind of been consolidating after that earnings report there, big volume up move, and it's just been consolidating. But now it's kind of coming back to maybe some potential support here around 1575. So I'll be watching this. If it can kind of move up, out of this consolidation range into this area, that might trigger me to get back into this stock. So another one on my watch list has a nice potential there. Under Armour. This one has this area around, just above 16 was support here for a few months. Dip below, then it's resistance. Technical analysis 101, what was support could become resistance. And then now it burst back above it after they came out with earnings. And then now it's sitting right above that level. And if you have pull up a candle chart here, that's the 200-day moving average is also right there. just above at this level. So really key level. If this one starts turning up and it looks like it had a nice move Friday, this would be a really nice long, in my opinion. Above this yellow could be your stop. That gap area, I wouldn't want to own it if it starts filling that gap. But above this area, it looks pretty good. Next one's Domino's Pizza. I'll pull up the weekly chart here. Really, really like this kind of a cup and handle type pattern. You can see it resistance here, kind of dipped back down a little bit and reclaim that level. So over this yellow here, Domino's is looking pretty good for a long, in my opinion. Here's a closer view. You can see it's not really a textbook cup and handle, but it's the same idea. This area was resistance, dipped back down here, came back, couldn't quite crack it. Here's the handle. Again, not textbook, but it's the same concept here, and then it's back above it. So if it can stay above this, $210, $215 level, this one looks pretty bullish in my opinion. If you want to be a little tighter stop, that 220, 220-ish area could also act as a stop. This is a really good looking chart. They report earnings this week though, so just keep your eye on that. If they didn't and it started turning up on Monday, this would be one I'd be interested in buying, but having it be so close to earnings, I'm just going to stay away and watch. So we'll see what happens after that report. But this area here, $37 to $38 was resistance for, many, many months. And then we cracked above it and we're retesting it here. It didn't have the best day on Friday. It kind of sunk back into that level. But if we can reclaim this here after earnings and stay above, $38, $39, this looks like a good long opportunity. There's been some gold miners and just gold in general. I was starting to get kind of bullish on it earlier in this year, and then they never really started moving in my direction. So I currently don't have any positions in miners or metals, but I'm starting to see some of them. Here's Goro, Goro, Gold Resource Corp. This is an interesting setup, in my opinion, that has same idea. There's this zone here that was support and resistance around 425 to 450. We kind of dipped right there, and we're just back above it. So if the miners start taking off, this would be a really interesting long here with a nice defined risk. That'd be a pretty wide stop, 7-8%. If you wanted to get more aggressive, if it moved up into this 450, 460 level, you can always put your stop below Friday's lows. So that's one. Newmont Mining is another one. Here's the weekly. It broke out of this downtrend and it came back to retest it here. And then there's this horizontal level. I always like to trade against a horizontal level as opposed to just a trend line. It kind of helps me define my risk a little bit more. But this area in 37, it crept back above it here. So I like this Newmont Mining above that 37-ish dollar level. Here's a regional bank, PPBI. Same idea, had a nice, I'll go to the daily chart here. This area, $42, it's sitting right there, and it sat there all last week. So if it can get a push higher, to say 43 bucks or so, this one might be ready for a nice move up. So another one we're watching is Tiffany. This one had a huge breakout late last year. This was one of those that was on my watch list, and I watched it run without me, but sometimes they give you another chance. So that's what it's doing here. This breakout level, $97 was resistance. Then it broke it, and it came back, didn't quite touch it exactly, but got pretty close, and now it looks to be starting to move up again. It has this little consolidation range here. Friday had that nice close. So this is what I'm watching. Maybe if it can, especially if it could get, this is one I might take a half position here, and then if it can get over these highs here, if those can be reclaimed, then I might add another half. But above this yellow line, bottom line, I think Tiffany for especially a longer term trade looks pretty darn good. An interesting thing too about Tiffany is their seasonality this time of year. This is going back 20 years. in March, it's averaged a 6.8% gain, and it's been up 84% of the time. So for whatever reason, this stock has March is its best month. This kind of data is interesting. I would never trade, just because March is good, I'd enter it. But it's kind of nice to know. And if the chart setup has a favorable risk reward, it can be helpful to know those kind of information. So Tiffany is definitely one on the watch list as well. So thanks for watching the video. If you haven't checked it out, come by ttptrading.com. It's myself and CJ Agresta. We provide live trade updates, educational content, focus watch lists, etc. So it's for the two of us. It's one price. It's $69 a month. So if that's something you're interested in and you have questions, feel free to reach out. I'm happy to answer any questions you have. And other than that, I hope you have a good rest of the weekend. And thanks for checking out the video. Take care.